Jared, welcome to F.A.C.E. Thank you so much for joining us today. How are you?
Thank you.
So, Jared, have you ever used Zoom before, buddy?
Yeah, do you need me to start the video?
Or the video, or share your screen about to show what you're going to talk about? And while you're doing that, I did go to your website. It's a little green button that says share screen on a drop-down menu. You see it?
Um,
It'll be
yeah,
above.
I'm trying to start the video. It says the host has stopped the video. There's really nothing interesting on my screen right now.
Okay, then I'll share my screen. Okay, I thought maybe it might have some markets you wanted to talk about, but why don't I do this? I'll share my screen and I'll go to different pairs here. Okay, so I went to your website, Jared, and I read a bit about it. The questions. What you do, and a bit about your history. And seems to me like the golden age, one of the golden ages for you was your time at Lehman. But I'm interested in what you're doing right before you got into the industry, and what was your first gig in the investment biz.
Yeah, so I came into the industry in 1999. Before I started working in finance, I was actually in the Coast Guard,
Oh,
and
okay.
I was a lieutenant in the Coast Guard. I went to the Coast Guard Academy. I did a couple of years on a ship out of Washington State, and then I worked in intelligence for a few years. And while getting my I was getting my MBA part time, I got a part time job on the P Coast Options Exchange, and
Okay.
that was really my first job in the business.
Yeah. Yeah, what a great place to start. I did it on the CME floor in Chicago, so that was up in San Francisco, wasn't it?
Yeah, and it was an amazing time to be there. I mean, if you think about San Francisco, 1999, the dot-com bubble,
Oh yeah,
what a crazy time to start your career. I
yeah.
mean, I learned a lot, but I like to tell people the NASDAQ crossed 3,000 when I started, and I left the floor a year later, and the NASDAQ crossed 3,000 on the way down.
Okay. They couldn't do it without you on the
Yeah.
floor, Jared. So and then your time at Lehman Brothers. I read that you were surrounded by so many talented people, and I'm a big believer in mentorship and community intelligence gathering. So I'm just guessing that some people took you under their wing, and you learned a lot from different people at Lehman.
Yeah, I mean, I really learned a lot from the environment. I was talking about this the other day. When I was in business school, uh, I was top of my class. I had a 4.0, and I studied really hard, and I did a lot of studying outside the curriculum, spent a lot of time in the library. And, even after you do that, there's still a lot of things that you don't know, and you get exposed to a lot of different things being on a trading floor. One of the things about working in index arbitrage is that it's really a money market trade, and you're really trading short-term interest rates. And this is stuff that I didn't learn a lot about in school. So I had to learn how to trade Eurodollar futures, Eurodollar options, Fed funds futures, and this was all new to me. So, I was really self-taught in a lot of things. And, I had an interest in a lot of things outside of equities. I was super interested in the bond market. I taught myself about the bond market. I became pretty much, one of the only experts on the floor on bonds, taught myself about commodities. And this was kind of early on. This was before people were doing cross asset stuff. People used to focus on one particular silo. They used to focus on one particular thing. And I was one of the few people that was really doing cross asset stuff.
Okay, so I'm assuming that you're still do you still trade, or what do you do?
So I published my newsletter, which is the Daily Dirt Nap.
And
And
here it is. I'm going to make a nice commercial for you.
okay,
There you
thanks.
go.
Uh,
Yeah, and you give a facetious definition of daily dirt nap. I mean, I have a nap schedule. I get up at 4 a.m. here in San Diego. So, how would I go about taking a daily dirt nap instead of just, snoring for an hour or so at 8 in the morning?
well, a dirt nap was a phrase that I picked up on the trading floor out in San Francisco, and a lot of the market makers, they were surfers. They would get off of work at 1 o'clock,
Oh, okay.
and
It's a
they would go
surfing term.
surfing, and they had their own lexicon, and they would say, they'd look up at the screen and they'd say, "Dude, the spoos are taking a hella dirt nap," and dirt nap meant that the market was going down.
Okay.
So I kind of took that and brought it to New York, and now it's gone everywhere since then. So
Okay, and is that you the day Lehman closed? That little character that
yeah,
looks like
pretty
Wile E.
much.
Coyote coming off the cliff?
Yeah,
So,
pretty much.
were you there for the closing
Yeah, I was
of
there the
Lehman?
day of the bankruptcy. The bankruptcy happened over the weekend. It happened Sunday night, and when they announced that the Lehman was not going to be rescued by the Fed, and I walked up to the building the next morning, and there must have been like 20 or 30 TV trucks there, and I'm trying to walk up to the building, and people are putting microphones in my face, and I go up there, and everybody went to work. They didn't know what else to do. And people kept going to work even after the bankruptcy, which was the crazy thing. They just kept going to work and going there in the hopes that, the firm might be rescued. And what ended up happening was Barclays bought the broker dealer operation out from the holding company. So, a lot of Lehman actually did survive under Barclays after the bankruptcy.
Okay, interesting. Yeah, it looks like you've written a couple of books here, Jared. I mean, this word evil sure comes up a lot in our society and on media. In fact, China used the word yesterday after, Mike Pompeo said there's plenty of evidence to point towards the COVID-19 coming out of Wuhan. Tell us a little bit about your book, the narrative in here, and is it fiction or what?
Yeah, All the Evil of This World, it's a novel, it's fiction.
Okay.
Um, and it goes back to the year 2000 at the top of the dot-com bubble, and it's about the 3Com Palm spinoff, which happened
Oh,
8 days before the actual top of the market. And there's 7 chapters, there's 7 characters. Each character has a part in the trade. There's a clerk on the trading floor, there's a market maker, there's a broker, there's a position trader at a bank, there's a sales trader,
cool.
there's an execution trader at a hedge fund, and there's a portfolio manager. And each of them has a part in the trade. And each chapter is written in a different voice of each of the characters in the first person.
Okay. And this book, Street Freak, is sounds like a little bit more of a biographical take on what you went through during this time frame in the world.
Yep, that's right.
During the, they call it the Great Recession. Was it great for you, Jared?
Well, the interesting thing is that, I had a lot of Lehman stock. I lost the stock. I lost money. I got hit pretty hard. But I can tell you that a recession is a great time to start a business. It's really the ideal time to start a business. If you can start a business in a recession and you can survive, you will do very, very well in the up part of the cycle. So,
Okay. What's your definition of what we're in? And I'll take into account neither one of us have ever were around for the last pandemic. And what's your view with let's say the rescue effort made by the Fed and by Congress, and do you think it's going to work? The Fed, do you think the Fed is going to be as effective for as long as they were after we finally put in lows in 2009 to continue to reflate asset prices?
Yeah, I mean, I think the reaction function of the Fed has changed over the years. We as a society, we're not willing to tolerate losses in the stock market. Like in this country, in the last 10 years, basically, the Fed and the government explicitly support stocks. And what we have right now is a very big disconnect between what's going on in the economy and what's going on in the stock market. Now, there's this quote that says that the stock market is not the economy, and that's always more or less true all the time. But it's more true now more than ever. I disagree with a lot of the actions that were taken, but my personal feelings about it really don't matter. As somebody who manages money, you have to put your personal feelings aside, and you have to invest, as things are, not as they should be. So, I've traded alongside the Fed in this rescue. I've gotten involved in a lot of credits, a lot of investment grade, high yield, preferred stocks, muni, stuff like that, because the stuff that the Fed is explicitly supporting.
Okay. Well, you mentioned earlier that you're one of the first to really get a handle on bonds on the Pacific Exchange. I think that, once a bond trader, always a bond trader. Interest rates are an excellent market, clean technical market, and really, besides currency, kind of the fulcrum of what everything revolves around. So, have you ever seen anything like this? We had this blow off in the bond market. And then before the Fed came in while we were crashing, I've never seen such a dramatic 1 week move in bonds in my career. And I guess I'm even older than you. And so the Fed came in and they bought the corporates, right? They bought
Yep.
LQD, and they came in and they bought junk. So here's the recovery in corporates. It was even more dramatic than treasuries. And I guess the laggard right now is, yeah, the junk. So looking at this high yield debt, what's your view on the bond market now? Have these markets been nationalized and they're no longer free markets? The treasuries with what the Fed did, I don't even think it was, I think they had to get special permission to come in and buy corporates. So having watched bonds for as long as you have, what's your view on direction, and have central planners taken the market away from us?
Yeah, I mean, that's definitely true. Although there's still things you can do in treasuries. The yield curve has steepened a lot just in the last few days,
Yeah.
because the Treasury is planning a lot of issuance to pay for all the stimulus, and we're going to be doing trillions of issuance this year. I just skimmed an article about the quarterly refunding. So what's happening now is that the back end of the curve is starting to sell off because of all this issuance.
There's the back end on my screen. So
yeah, we're also going to be issuing a 20-year bond, which isn't new. We had those in the past, but they're coming back. So they want to issue more in the long end of the curve and take advantage of issuance. When it comes to high yield, the high yield market is kind of bifurcated. The all bonds, the market split in half. You have the bonds that they're buying have 4% yields. The bonds that they're not buying have 10% yields. And there's pretty good opportunities in the space where they're not buying the bonds. I mean, anytime you get out to double-digit interest rates, it starts to get me interested. So,
okay. Well, you have any forecasts here? I've been talking for a while, especially after this recovery, and there was a lot of cash moving out of equities last year, really before the top came in, and everyone moving into bonds. I think it's the most crowded trade on the planet. And do you think there's possibility that this was just the first wave down in yields, and that this could be a failing rally and we could start seeing yields head up quite dramatically. Maybe we get the 10-year back to having a decent day today, about 1.5% to 2%, and the 30-year back to 2%.
Well, if borrowing costs start to go up significantly, I mean, right now the Fed is doing unlimited quantitative easing. There's no cap on
Yeah.
the quantitative easing.
Yeah, you'd be
So,
fighting the Fed with that position, wouldn't you?
well, kind of. I mean, right now they're only doing about 8 billion a day. They were doing 10 billion before, 12 billion. So they've reduced the QE by a little bit. But if our borrowing costs start going higher, then if tens get out to 1.5% or 2%, my guess is that the Trump administration is going to ask the Fed to directly monetize the debt to keep interest rates low. So I think there's a possible that yields go higher in the short term, but ultimately, I wouldn't be betting on a bond.
Well, who knows who's going to be asking them to do that towards the end of the year?
Yeah.
You're assuming a re-election. So who knows what's going to happen. It is a position where you're fighting the Fed. I think there's opportunities on the short side of bonds because what do you think that it's a health crisis that has turned into a financial crisis, which has turned into a credit crisis. So you've seen credit crises before, and we could have a bear market in bonds under those conditions. Especially, I also notice you're a follower of currencies. I'd be curious if you have a view on the dollar. I mean, it's pretty divided camp. You have a lot of dollar bears that are saying, we are putting in a major top, and someone I respect is, talking about a 50% clip of the dollar in the next several years down to here. What's your view? Are we peaking here in the dollars? This is a monthly chart. Or a lot of people talk about the shortage of dollars and the pipes that are needed for emerging markets and all their debt, and that there's a dollar shortage. Which side of the fence you come down on?
I kind of don't come down on either side of the fence. I mean, back
Okay.
in
You're
2014,
strongly neutral to the dollar?
yeah, kind of, for now.
Okay.
Like
All right. That's fair.
I really got the long dollar trade right about 5 or 6 years ago. I was short the Canadian dollar. I was short the New Zealand dollar. I was short the Australian dollar, and that worked really well. I'm still short the Canadian dollar, mostly for idiosyncratic reasons pertaining to Canada, but I don't really have a strong view on the overall direction of the dollar here.
Okay. Anything you do have some conviction on? Like you said, you're a money manager. You're managing money.
No, I'm not managing
Oh,
outside money. I'm managing my
okay.
own money.
Okay.
But I'm
So
not outside money.
if one of your subscribers came to you, Jared, and said, I have 100K, Jared, cash, uh, how do I deploy it? What would you tell them?
I tell them that I can't give personal financial advice.
Okay.
I publish the newsletter. I can disseminate ideas and recommendations to all my subscribers, but I can't answer emails like that. I
All right.
can't.
Well, how about us? I'm not asking you for. I'm not going to plagiarize your ideas. All right. Let's just say you're flat right now. You own nothing. What would you be doing in the markets here? Besides talking in generalities.
Yeah, over a 10-year period, I came up with something, and I didn't have a name for it, so I just called it the awesome portfolio, which is kind of a joke. But I think that you need to have exposure to inflation over the next 10 years. And I think that ordinarily you would have a lot of bonds for diversification, but I think the diversification benefits of bonds have mostly disappeared at this point. So my allocation would be 20% equities, 20% bonds, 20% cash, 20% gold, and 20% real estate. And it's the gold and real estate piece that sort of gives you some diversification and gives you some exposure to inflation if we end up getting that.
Okay. Do you feel that what the Fed has done is going to for sure lead to it, because there are still some guys that are in the deflation camp. Do you think there's a possibility that the Fed is pushing on a string? I mean, before the coronavirus, we were already in a manufacturing recession. People forget that. They think that everything just happened. There were problems in the repo market in the fall. So there were things going on that weren't so positive in the economy, and the consumer was the only thing holding up the economy. So do you think that the consumer, even when they loosen up, is going to go out and return to their normal patterns, or are we all going to have PTSD here?
I think kind of the latter. I think we're going to have PTSD, but I wouldn't call it PTSD. I think I've talked to a lot of people, and one of the things that people are starting to realize during the lockdown is that their consumption patterns have changed, and they're spending a lot less and they're saving money, especially if they have incomes coming in. So, I don't think that we're going to return to previous levels of consumption for many, many years. And if you think that consumption is 70% of GDP, then this is we're going to have very low GDP, zero, possibly negative for a long time. I mean, I think we'll have negative GDP for out to 18 months.
Okay. And even though you would still go with 20% equity in that environment, is there a sector of the market that you think will come back quicker? I mean, on this reflex rally we had in the S&P, by the way, gold's crunching. I thought we'd get one more high, but it doesn't look that way. But on the S&Ps, we had this rally from late March, really led by what got us here, Microsoft, Amazon, anything you see sector-wise in the market. Assuming you like gold, do you like the miners too? They've been very strong as of late.
Yeah, I like gold a lot. I like the miners. I also think that I study sentiment, and I think the sentiment significance of front month oil futures trading down to negative $30 is pretty. I think that's pretty significant. And I think that was the sentiment bottom in oil. So I'm actually reasonably bullish on energy here, and energy has rebounded quite a bit. You could have bought ExxonMobil at a 10% dividend yield. Now it's at a 7.5% dividend yield. There were some pretty big opportunities. So I think energy is actually going to do okay.
Okay. All right. And the best way for people to follow you, Jason?
You can follow me on Twitter at DailyDirtNap. You can follow me on Twitter at DailyDirtNap, or you can go to my website, which is dailydirtnap.com, if you want to subscribe.
And you're a DJ?
Yeah, I am. Yeah.
All right. Well, I believe that music feeds our soul as well, Jared. So, it was nice meeting you, and you have your own radio show as well, right?
Yep. It's called The Jared Dillian Show. It's on 6 to 8 p.m. Eastern Time, Monday through Friday.
Internet station, or like an internet type broadcast?
It's on a handful of terrestrial stations. You can also stream it at jareddillionmoney.com.
Okay. All right. Well, I wish you and your loved ones remain untouched by this virus, and thank you for taking out the time of your schedule to come and talk to us about what you do.
Thanks a lot, Dale.
And there's a price you pay for coming on. Do you know what it is?
No, what's that?
You're now my trading warrior brother. You accept?
Yeah, I accept.
All right. All right, bro. So that's a wrap, everyone. That's Jared Dillian, and you know where to find him now on Twitter. Or if you're interested in his subscription, go ahead. That's a wrap for us. Everyone, good hunting the rest of the day. And remember, most of all, even though America is in a little bit of distress, don't forget, don't just count your pips, count your blessings. We'll see everyone tomorrow. wrap up the week with NFP. Adios.